Pinterest is incredible. It's been around for a while, Paul. I use Pinterest in terms of my wedding photography, Mo. It's a great outlet for sharing my work, much like a Facebook or an Instagram. You can get it
really?
out. Oh, because of course the brides, they want to see the flowers, the dresses. They want to see outdoor weddings. They want to see spaces.
How often do you get a sale from Pinterest?
I think it's very little people say I found you on Pinterest, but
it's more like we found you here, we found you here, we found you
but
here.
I'll tell you what, I literally now that you say that, I remember I had a bride said I saw a cake photo on Pinterest with your Seth and Beth logo in the corner. Found the website, hired us, spent 10 grand.
Wow.
It's amazing. Yeah. So let's get after Pinterest.
It's going to be a very boring 8-pillar analysis, and here's why.
Go ahead, Paul.
First things first. They've only been public since mid-early 2019. Market cap of $43 billion, revenue of $1.7 billion. That is 25.5 to 1. Remember, guys, Microsoft's like 7 to 1, right? So, okay. They don't make money. They lost $128 million last year. Good news is they had cash flow of $11 million.
Are you shocked by that? For a company been around so long.
No, I'm not shocked by that because they're still trying to grow and establish themselves. Cash flow, $11.5 million bucks.
What is the best way to remove the most speculation from something before making an investment?
The best way to do it is to buy already established companies with very consistent cash flows that are growing consistently and not erratically. You're never going to get rid of all speculation. And in essence, speculation is always in a sense of you're always making assumptions that could be wrong. If you call that speculation, it's not really speculation. Speculation is when the only way to make money, first off, you don't have a good way of getting paid back unless the stock price goes higher and higher. That's the speculation that I don't like. But again, if you look at the income statement for Pinterest, let's go quarter to quarter. I mean, guys, this is pretty effing impressive. 190, 273, 201, 261, 280, 400, 272, 272, 442, 705. And these two right here, big drops, were COVID.
This is revenue growth over the past.
And they actually made $200 million last quarter. Wow, look at that. They made $200 million last quarter. That's impressive. But look, every other quarter, they lost money. Now, the question you have to ask yourself, is this sustainable? Is this sustainable? If this is sustainable, guys, if this $200 million in profit is sustainable and growing, how much is it going to grow? Does that make today's price reasonable? Sure. But again, you have to sit there and decide. If you're assuming $200 million a quarter in profit and it's growing, what does it need to grow to justify $45 billion in value today? That's all we're asking here. Investing and the art of it is all about your assumptions. What does it have to go here today for you to be happy paying $45 billion? What does it have to go to here in the near future for it to go to $45 billion in value today? What's the present value of all those future cash flows? The great news is, with our software, we are building a stock analyzer tool that will let you put in those projections or even tell you, hey, if you want to pay today's price, you need to get this kind of growth out of it for that to happen. And you have to decide, is this reasonable?
You talk about growth, and one thing I see, I do pull up some of these hype YouTubers because I want to make sure we're doing the right thing, Paul. I like to follow what I don't think is correct sometimes, and you never say the words projection. These guys they always talk about, look at the projections 10 years from now. The company I'm thinking to myself as I'm driving, listening, like,
guys, let me ask you a question.
What projections are down? I mean,
you know yourself better than anybody in the world. Your projections from 10 years ago, are you hitting them? Better? Worse? What are you doing relative to your projections 10 years ago? There's a reason why the 30-year treasury pays you the highest rate of income. It's because of all the unknowns for the longer periods of time. But yet, we pay a premium for assumptions over longer periods of time. It makes no sense. The US government pays you more money to say, hey, give me your money for 30 years, I'll give you more money than if you give me money for 10 years or 1 year. Why? Because there's so many unknowns. It's the whole chaos theory. Is it the chaos theory? The one that a butterfly flaps its wing? No, it's not chaos theory.
It's the butterfly effect, right?
Butterfly effect. Yeah. A butterfly flaps its wing, a billion years ago, it affects all of this today because those ripple effects so many years down the road. Every single decision a company makes in the next 2 years will affect the 10-year projection. I want you guys to remember, Amazon never hit their 5 and 10-year projections in the early, mid, late 2000s. They were always short of it in terms of profitability. So the company like Amazon, that was like literally one of the most successful companies of all time, didn't hit their projections. So before you make a decision based on, just ask yourself, is this a reasonable projection? Value investing is about making what we perceive to be reasonable worst case assumptions and projections and seeing if it still works. That's what a value investor does. We're still making projections, but we're being more conservative about it. Because our theory is we have 10,000 stocks out there. Find 20 to 30 that on worst case scenario projections, the companies are selling for less than that. That's 0.2 to 0.3% of the companies.
Go back to, let's go to the initial numbers. The PE ratio, which may be
X.
Paul.
X, negative 7.5% profit margin, 2X is there. No dividend yield. Return on invested capital is a little skewed here because it's negative because they haven't made money over the last 5 years. So far we have 2 X's.
The revenue growth, pillar number 3, is up. Should we look at profit growth, Paul?
Let's go to profit growth.
Thank you.
Profit growth.
Make sure you guys are tickling the thumbs up.
Profit is an X. It went from negative 63 million to negative 128 million.
Oh boy. Okay.
In terms of a full year. Balance sheet is a check mark. They have plenty of cash on hand. They have $2 billion more. So when you're paying $45 billion for the company, you're actually only paying 43 because they have $2 billion more than all of their liabilities combined. That's what I love about tech companies. They tend to have very low debt when they're starting out.
That was assets over liabilities?
Yes, sir.
Free cash flow?
Your cash flow is a check mark. We only have 3 years of full free cash flow. We went from a negative 22 to a negative 17 point. Sorry. We went from a negative 82 to a positive 11.43 check mark. So their free cash flow is getting better. Now, what free cash flow do they need? I do think they need like around at least 1.5 billion in free cash flow to justify today's money. And they're at 11.43 million. So they need to make some major strides. But last quarter, let's see what they did last quarter in free cash flow.
Please do.
Last quarter's free cash flow was $100 million. All right, so they're getting there. They're getting there. They need to do about $500 million. They need to do about $400 million a quarter to justify today's price. So they're getting there, but it's still a ways away. I know it sounds boring, but I would be cautious on this one. If you want to ride the momentum or trade it on charts, by all means do it. But from a value perspective, you just need to be patient. That's it. But I think it's a great company that has potential. And women love Pinterest, and we'll go from there.
So bring it on home with what do you think the company should be valued, and what about what price target would you like to buy Pinterest at?
I think the company is an $8 to $10 billion company, which means it's got to drop in price by 80%.
Oh boy.
Oof. Yeah, which means it's got to be $14-15 a share.
Wow.
Actually, this was just last summer, so.
Was it really?
I mean, yeah, if you zoom out and just start looking, I mean, look at that.
Oh, geez.
Yeah,
That
last
is
summer.
incredible.
So
Look
A
at
year
that.
ago, it was $11.
as you're saying it, Paul, you're like, you're crazy. That was last summer.
Oh, by the way, but let's see number of shares outstanding. They are increasing their shares outstanding. That's an
What
X.
is it? Somebody in the chat wrote, I can't wait till Paul sees the shares outstanding.
Well, it went from 530 to 618. It's a big jump.
Yeah. Okay.
So right here we have, shares outstanding. No, what the heck?
Uh-oh. So we are beta
There's
testing.
an error. That's why. There's an error.
We are
because of the
beta
3 years.
testing the Everything Money website. It is coming out in a couple weeks, and our patrons are frothing at the mouth to get it. But
Oh, yeah. The shares outstanding is jumping up big time.
for all of you in the Bid and Ask Nation, which is the middle tier of our Patreon level, if you're trading and making money, you're probably interested in what the
Oh, here it is. I'm sorry.
Go ahead, Paul.
No, now it is. There
You
was
just
a
cut me right
yeah.
out there.
So right here, guys, there's basically one check here.
Uh-oh. You're right. One
No,
check.
that's why. It's only 3 years. So one of the issues we have in the thing, I got to write that down, is if there's not 3 years of data, it sometimes shows an X when it shouldn't show an X.
Now you have 8 developers working on this website
have 8
tirelessly,
developers
so I'm
working
sure
on
we'll
it.
get this fixed within the hour. Trader Mo, give us your thoughts on Pinterest and trading this beautiful company.
Okay, so
which
before I
love.
get to that, I always say that gaps always are going to get filled. I want to show you guys an example of a gap that happened back here and a gap here that did not fill. So I say always, but when I say always, I mean like 99% of the time. There's a very good chance that this stock price is going to come down, and we already do see that it's a downtrend coming down. So just be aware that when I say gaps always fill, yes, they fill, but gaps can take a year for that gap to fill. But there is no support at that level. So let's get into it and see what we can do with it right now. Let me go over to a daily chart real quick, just so you can see this mess. So we're sitting right below our 100-day moving average, our 50-day and 25-day moving average. So this is a lot of resistance that we need to get through. Until you get up into the $78 range, you're not going to have much movement unless there's some big news out there that precipitates that move. So from my perspective right now, we are still in a downtrend. What we need is that red line down here crossing through yellow and moving up. I don't foresee you being able to buy this stock confidently until you get to probably $75 a share. And this goes back to my theory of buy high, sell higher. Remember, when we're trading on charts, you want to be giving yourself the best opportunity to make money, the best probability to make money. Buying right now because the price is low is not going to give you that opportunity. If you get to 75, maybe you'll get a ride from 75 to 87. Make that money a lot more easily. Make it easy on yourself. Don't go crazy.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.